Bro, that's 90 pips. 90 pips before we saw rejection. Once we saw rejection, it came down to like 78. But bro, 90 pips at the peak. 90 pips. Like, that's fire. That's it. If you could do 90 pips, you're killing it. You know what I'm saying? So that's how we do this, man. That's how we do this. That's how you make money.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trading get paid, trading get paid, trading get paid, trading get paid, trading get paid. Oh yeah, trading get paid.
All right, guys. So, man, we're going to talk about this strategy, man. I'm going to give you a tip on how to really find perfect entry on an engulfing candle. That engulfing candle is one of the most powerful entry candles in the market, and I'm going to show you how to utilize it even better. So make sure you watch this video through. If it brings you value, go ahead and hit that like button. Comment below. Let me know what the best thing that helped you in this video. Like, did the entry technique that I show you help you to get better entries, and does it really kind of change the way you look at an engulfing candle? Comment that below, and then subscribe to the channel, share it with somebody, and let's get these videos out to more people. Quick shout out to one of my subscribers, George Williams. He joined the channel. He's part of the channel club. You can click the little join button underneath, $2.99, and you get emojis and some private chats on live videos, some wallpapers, some other cool little benefits, super chat and all that kind of stuff. Pretty dope. So anyway, shout out to George Williams, subscriber to Trading Get Paid. Let's jump into this engulfing candle. So first things first, if we're gonna trade an engulfing candle, it has to come after a rejection. That's where most people mess up, is that when we look at it, when we're looking for an entry, we don't first look for a rejection, right? We need volume going in the right direction. So if we think that price is pulling back into this area here, we see structure area, we see all that, and if we think price is pulling back into here, we need to know that this is going to be an entry point. We need to know what it is that we're trying to do. So if we see an area that we think price is pulling back and we see just one candle bigger than the next, that really don't mean nothing, you know? Like, just having a candle bigger than the previous candle really doesn't give you everything you need for an engulfing candle. What we need first is that rejection. Price moved with volume and then rejected to the opposite side. Now we have an indecision. That's what we want to see before seeing an engulfing candle. That's where most people mess up. We just see one candle bigger than the last and we just enter because it's an engulfing candle. That can win you some trades. But look at this one, right? We see push, we got this. This is rejection, but then it pushes back up. We get an engulfing candle right here, but then look at all this that you got to eat. Look at all that drawdown and stuff. Yeah, you would have won the trade, but I mean, you were here. This is a 15-minute chart. So an hour, 2 hours, 3 hours before you really started seeing any kind of movement. That's not what we want. We want to see, instant movement. We want to see volume in our direction. And so how we do that is we make sure that we have a rejection in the opposite direction. If we're looking for a bullish move, we want to see a bearish rejection. And then that's, that gives us the technique. So next thing is we see the engulfing candle. Now, is that enough for an entry? In and of itself, no. That in and of itself is not an entry. We see the engulfing candle. It comes and it engulfs both the rejection candle and the indecision candle. It engulfs it. It's big. It's not a close above, but it's an engulfing, which we really like that. The engulfing itself has some rejection at the bottom side, which we really like that. And so This is a very nice engulfing candle. It's at a level of structure with a rejection and some indecision, and it closes above our area of indecision. We like that. That's a good engulfing candle. So most people are going to tell you, here's your entry. Just enter on the engulfing candle. So boom, we drop our stop loss behind our rejection. And then, where do we put the take profit? Up here? Do we put it up here? Do we put it up here? Like, where do we put it? That's what I'm going to help you with right now. First things first, we are risking these 19, almost 20 pips. Really probably should be a little further down. Let's just call it the rejection. We're risking about 20 pips here by doing this. We have a nice risk to reward. Everything's happy, but we don't know if price is going to go all the way to the top or not. That's being dishonest. Truthfully, we know price is going to go here, and we probably think price is going to go here. So I'm pretty happy with that because we see this structure right in here. We think that we'll at least test this area right here where the last rejection to the downside came. So we're pretty comfortable right there. So we're at almost a 1 to 2. We're good. We like it. But can we stretch that even further? First things first. Every time we see an engulfing candle, or let me not say every time, most times that we see an engulfing candle, within the next couple of time periods, most of the time on the first time period, we're going to see a 50% rejection. Price is going to pull back in waves. And because we're looking at a 15-minute candle, here's the thing. Every 15-minute candle has 3 5-minute candles inside of it. Has 15 1-minute candles inside of it. Now, I'm by no means telling you to go trade the 1-minute chart or the 5-minute chart. But what I am saying is that why don't we let that cycle complete first? Number one, what time is it when this happens? We have to ask ourselves, is this 15-minute candle on the 30-minute cycle, on the 1-hour cycle, or is this a 15-minute candle? Meaning, like, let's just say 2:15 a.m. That's a 15-minute candle. If it's 2:30 a.m., then yes, it's a 15-minute candle, but it's also a 30-minute candle cycle. If it's 3 o'clock, it's a 1-hour cycle, right? You understand the point? So if we have to ask ourselves what this is, and if it is a 15-minute candle, which this is 4:15 a.m., then why not let that 30-minute go ahead and cycle? And so here's what's going to happen next. We just go down here, we grab a Fibonacci tool. Now you say, what, a fib tool? Watch this. Go from the bottom to the top and stretch it out just so you can see it. And I want you to come to that 50%, and I want you to drop a line on it just like that. Real nice, right on the 50 right there. Right? Make sure we get on it nice. And so you got that. What does that do for us? Well, number one, it gives us an area for that median structure. Number two, it gives us an area of rejection on a cycle. And number three, it allows us for a retest entry, a rejection entry that will allow us an even better risk to reward. When you have this, one of the things you can do, and let me make this a little bit bigger so you can see it. One of the things you can do here is if you already know you're right there on the 50, go ahead and move it up to that structure. Go ahead and move it up to that body close, because that right there gives you more precise structure. So now we know we're at that 50 and we have body close confirmation right there. And so all we really need to do at this point is wait for price to reject it, not come down and pass it and do all this stuff. When we see price coming down back toward this area and pushing away, that's when we want to find our entry. So let's see what happens. You see how price came down? It was yellow. Let me do that again so you can see it. You see how that price just did that? How it was yellow? Man, as soon as we saw that thing pushing away, that was our entries. We could have came in here and that was our entry. Now, instead of being right here and being at a 1.87, 1.9 risk reward, we just added an additional, let's see here, 6 pips. Doesn't seem like much, but that 6 pips just put us at a 3.1 risk to reward ratio. Now look at the little bit of risk versus the big reward and the precise entry by which we were able to see. As soon as we saw that pushing away, we should have been in the trade. So let's just say we get up in right here. We're happy right there, okay? We see that 50% retest, we get in the trade, and now price is moving. We have this, and I don't set a take profit. I don't set like an automatic take profit. I set a stop loss. I do not set a take profit. I do that manually because I want to scale my trades, okay? So price goes and starts moving. There's another retest, and let's just see what happens. So guys, we see that we have this beautiful entry here. We're already in profit, and now we see indecision coming into the market. Does that mean we close the trade, or does that mean we leave the trade open, or what does that mean? Well, we are at that area of structure that we were anticipating, and we're seeing indecision. So because we're seeing indecision, that doesn't mean that we should close the trade. What it likely means is, number one, we should already have moved our stop into profit. And number two, we should be looking to target the daily high, okay? We should be looking to target the daily high, and then we should have closed a partial position. So if you were in at a $10 lot size, you should have closed it down to a $5 lot size, or a even more. Honestly, that's up to you. I don't know what your scaling method is, but I would say drop it down to a $5 50% position, and then let's see what happens next. Now we have already secured the bag. Think about it. We have already at this point put about 35 pips of profit into the bank. That's already secured, and we've already put our stop loss into profit by, look at this, 15 pips. So even if price were to come back and hit, we're 15 pips into profit. So a trailing stop loss protected our downside. Here, we're at just over a 1-to-1, almost 1 to 1.5 risk to reward. So we're still good. We still like it, and we're looking for opportunity. So let's just see what happens next. Guys, look at that. Look at that. We literally came right to the daily high. And now, I mean, this is insane. Now we're 60 pips into profit. Does that mean we're done? Well, no, not necessarily. What it means is that now we've pushed into profit. We've come down, we're here. We probably need to go ahead and move our stop loss. And at this point, we're just, let's just act like that take profit isn't there. Let's just think about without a take profit. So at this point, now we're just scaling the trade. So let's close another portion of our position. If we're left with a $5 position, let's close that down to $2. Now we've put an additional 32 pips in the bank. We've put an additional money in the bank, and we've already secured even more of our profit now with a trailing stop loss. So now we just let the trade run. Look at that. So now it starts to come back down. We don't want to be in that, right? How do we know? Well, watch this. When price pushed past, and we already knew we just broke the daily high, and we're pushing the new daily high. You can see that dotted line right there, and you can put that on your chart by just going to your settings on TradingView. When you know you're pushing the daily high, and then you saw that rejection right there, you saw that pin bar. It's really not a pin bar, it's more of just a rejection candle. When you saw that wick and that rejection at the top, at that point you should have been thinking about closing the trade. Why? Because you know that you're already at a daily high. You're pushing the high. You're pushing higher than price has been, and you're already higher than, you know, what the previous high was, and now you're seeing rejection. That's it. Close the trade. So at that point, you likely would have closed the trade right there, right? You wouldn't have, you know, if we could lie and say you got all the way up here, 99, you know, whatever. That's 90, bro. That is 90 pips. If you eat 90 pips, you did good. That's how we do it, bro. That like 90 pips, 90 pips. If you could do that all the time, that'd be fire. But here's the thing. Even if you got the 78 pips, we're happy. We're happy. We just caught 78 pips. We did it responsibly. We scaled out of the trade. We let the money work in our favor the whole time. And we put 78 pips in the bank. What I'm telling you is that 50% retest entry is going to give you precise entry nearly every time we enter on an engulfing candle. So I would encourage you to wait for that retest. If you're a day if more of like a swing trader, wait for a completed move down here on the retest and just let the trade run. Scale the trade responsibly and use proper risk management all the time. That's how we win in this market. And guys, if you want more content like this, if you want more in-depth analysis in class, we send trade setups out every week, all throughout the week. Our trade setups are hitting at over 94% for the year so far. 94%. So we're killing these trade setups. If you want our trade setups, if you want to be able to hear from me, you want my mentorship and me to teach you how to trade the way I trade, what I want you to do right now is go in my description, go into and click on the link, tradinggetpaid.com. Become a student, become a member today, and let's win in these markets together. You can ask our students, just go in the comment section and ask about TGP membership. And I'm telling you, I promise you, you are going to hear such great reviews and people who are just making money, people who are changing their lives and learning a skill set that nobody could ever take from them. So become a TGP student today. If you're not ready to make that level of commitment, that's fine. Go and download my free app. You can just go right to the Apple Store or the Android, Google Play, whatever it is, and just search TGP Forex, Trading Get Paid, TGP Forex. Just type in that. My app will come up. It's free. I give trade setups out on there, updates, and there's a free starter course on there. Go ahead and get that, and that free app will help you a lot and give you a good starting point. But if you are ready to fast track your success and really take your journey to the next level, become a student at tradinggetpaid.com, and let's win, let's eat together. I'll see you guys in the next video.